Hey, everybody, it's Pete Carmasino with CHAIKIN Analytics. I'm your chief market strategist here. And this is our halftime show here on StockCharts TV. Thanks for joining me. And we've got a lot to talk about today. We've got a pretty major sell-off here. We are testing support levels. I can't call them broken until really the end of the day, until they close. But boy, we are right around that, just hovering underneath the 4,300 level as I'm recording now. And we're going to get into this right away. We've got a few stocks here. Really, every stock today that I'm going to be looking at is in a bearish stance, breaking down. The market is obviously under pressure here. And so we want to look at names that you may want to avoid. Okay. There'll be a time when we'll continue to look at some names to take advantage of. But some of the names that we talked about on the downside have been playing out. Some of the ones we looked at for upside trades really never got the momentum that they needed and are starting to curl down and hit stops. And that's what risk management is about. So you got to take it as it comes. But a quick market overview here. I mean, look, most sectors are lower. I mean, that's obvious, right? I'm not telling you anything you don't know. I'm just looking at my notes. And, obviously we've got growth, a big underperformer, massive tech sell-off here, which is really the major push lower, but definitely from the communication services and tech, which is trailing today, obviously, because of Facebook with the whistleblower news that we saw over the weekend. But in general, when rates are moving higher, which they are, tech doesn't like that anyway. So, we can't get really much help when we've got two or three different things happening at once. And that's really what's happening. You're getting a multitude of factors coming in. It's kind of a domino effect and turning a lot of different areas. I mean, obviously, with the renewed pressure, we had a nice bounce on Friday, which was a bit of a relief, but things reset and kind of rolled over today. So we had some Fed speak coming out. Again, Facebook's that big decliner, but you even saw a name like Tesla came out with some great news on their deliveries. And that was great to see, but that too is being met with a little bit of selling. I think it's still slightly positive on the day, but not doing as well as it probably would have done if it was more of a bullish day. So when you start to see things like energy's outperforming, that complex is up over 1%. You're seeing crude up over 78 at one point today, if not higher. And just a lot of things that are pressuring the markets, from inflation to supply chain worries and shortages, right? So shortages kind of create inflation, right? Think about what we're seeing in energy, natural gas, and all these other areas. But we're going to get to some of the names that don't look great today. They are bearish. They're setting up for continued downside move. You either want to take some action here, protect, or potentially try to play the downside. That's up to you. Again, however aggressive you want to be, always use risk management in whatever trade you decide to do. So let's get to the charts. Take a look. Okay, so I built a list here, and we're just looking at several names here, 6 to 8 names or so, and in a lot of different categories, right? And so this one's in consumer discretionary, obviously an apparel retailer. If you've been into any mall ever in your life, you've seen American Eagle, Outfitters. But the stock has really been under pressure for quite some time. And look at this base. This is interesting to me. When you start to see a name like this kind of sit range bound and then start to break down with a lower highs that we've seen here, you can almost draw a perfect trend line here, and then really broke down. It's really starting a new trend line on the low side. But what do we have? I mean, we've been bearish on the name, the financials, the earnings, but a lot of the experts are even very bearish on there. And we're going to take a look at the chart too on our system, so you can see, dive into that power gauge, give you a little taste of what you can see there. But this is a great start. You start to see names like this from a technical standpoint break down, and then obviously fundamentals are already bearish. You probably have a tailwind of negative factors that you might be able to take advantage of. Okay. Again, from a protection standpoint, or if you're aggressive and you do want to play the downside, that's possible as well. So if I go and look at, if I look at my list today, here's American Eagle on our system, right? You see it's bearish. It matches what we have here on StockCharts. But look, the relative strength started right here, right around that August 12th. And I mean, from the negative standpoint, it had broken our trend line. There's your volatility band that we see here. And it's been riding that middle 21-day EMA that we use on our system as a proxy for when it's hitting resistance and oversold. And that's what's happening as we speak right here. Okay. With that negative relative strength on the ACP platform, right around that August 12th, right? You saw that the moving averages had already crossed. It hit a level of resistance and really rolled over and then got no higher, really. So again, that's one of the names that I'm looking at with concern. And I'm going to get to, I see, if you see, and you already see these symbols, there's some road and transportation and rail names in here as well. But let's look at this automotive supplier, the auto parts, Gentex. Now, this chart's showing a bit of, positivity here. Okay. But look at the fundamentals. Experts in earnings are really on the very, very bearish side. Technicals are in the middle. That kind of aligns with what you're seeing on this chart. But let's go look at our chart at GNTX to see what we can see. Now, our relative strength was getting better, and you can see that on the ACP system too, but we're right above, or right at, I should say, resistance. Okay, money flow did get a little bit better, but again, when you've got sort of these issues in place with supply chain and increased costs and all these other things that are happening, I don't think Gentex is going to be immune to it. Plus, you're seeing estimates getting lowered. Okay, so you see this little 41 cent that's being lowest, that's lower than a year ago, 41 versus 48. So they're already starting to see a squeeze there. So just be careful with that. Okay, that's when the fundamental side can sort of help you look at the other side of things, even though a technical setup might be coming into play, into focus a little bit. Look at the bigger picture. Let's look at Lovesac. This is an interesting name, funny name, great company. And also was trying to put in sort of a technical change, right? A bit of a trend change here. But again, experts, everything else were kind of in the bearish level, even though technicals are very bullish, very mixed bag here. Let's look at our chart real quick. Again, supply chain, inflation, transportation costs, everything you name it is kind of coming into play here. And again, this one is really on the brink of becoming either more negative or more positive. I can't say it's, strictly a negative setup, but I do have a weak trend, a stock in a weak industry. And I've got this particular name hitting up against resistance and starting to roll over, very similar to the other names as well. And so let's look at Yeti. All right. Great popular name. It's been around for years. It did go public, but here's one that's really, again, financials are bearish, experts are bearish. Technicals were pretty strong for quite some time, but have really broken down and gotten lower. Think about what they do. I mean, think about some of the things that they make, right? Those mugs, those containers, all types of materials go into that. Obviously, shipping costs as well. So if I look at Yeti here on our chart, again, I can see that rollover starting. Now, this is early in the trend. It's actually oversold. So if it bounces and gets to that 95, maybe even the $99 range, there might be an opportunity then to either scale out of a position if you're in it, or depending upon what's going on with earnings. Again, you got to be careful with this one. Again, I see the breakdown. I'm just calling it out. That's all I'm doing. So here's one. It's really hard to be negative on, but the stock doesn't really care what I think or anybody thinks. It's definitely a changing trend, and we are bearish on the name. Although earnings have been stellar from a technical standpoint, this is already broken down. Even if you're using just a 50 and a 20-day moving average, you see that 20 crossing underneath. That's an interesting sign as well. But again, if I go back and look at Square on our chart, again, down 6.5% today. Gosh, you're seeing put in a lower low here recently. It hit that resistance. As I said to you, a lot of these names hit this resistance mark and roll over. And that's what's happening here. Mixed bag on relative strength, but we've got negative power gauge. And obviously the money flow isn't helping either. Now, let's get into these transports before my time is up. So I've got CSX, right? This is a railroad company. Again, this has been really range bound since April or May, but it just put in a lower low. Tried to get above that today slightly. If you see at a high of about 30.84 and then rolled over. Again, we are very bearish on this name. If I go and look at CSX here on our chart, it's that same setup. Relative strength broke down back in June and really had never had a chance of recovering. Tried here, but was rejected and rolled over. Okay. The next one, and you can see that right here, right? The next one we'll look at is Norfolk Southern, same industry, same rating, very bearish. The trend has obviously started. So if you've got a position in this, you can see these are trying to get above the recent highs. There's a lot of gaps here. It's definitely changing trend, and really has for quite some time. But if I go to Norfolk, although it's up 1 and change today from a percentage standpoint, up about $2 or so, that negative relative strength is pretty evident, right? And when you get something that's overbought around this level, it could be hitting resistance, right? So it could be an opportunity to either scale out of this name, or even potentially try to play the downside if you wanted to. And one of the last ones is Union Pacific, UNP. Again, very bearish. Financials, earnings, all negative here. You're seeing that same pop here on all three of these, where they're struggling to get above some certain levels there. And if I go to UNP here real quickly, again, Union Pacific, we know it. It's been around for quite some time. Wow. Well, I mean, very red here. You see red money flow. Relative strength has been negative, even though it was moving higher. It's pretty much range bound, but it's getting worse at this level. And then the last one here, and I'm going to wrap it up, is this particular symbol here. It's SON. Now, SON, I'm going to put it in the ACP platform too, is Sonoco Products, but this is the container and packaging component of this particular company. So type in SON here. There's the name, pop it in. Again, very bearish. You're seeing all of this. Now, financials are neutral. That's okay, but a very similar setup, just like we saw in all these other railroad names, having trouble at that previous low, moved higher, spiked lower, kind of consolidating. But what are we seeing on our chart? That negative relative strength really started around June, and it's just really progressed lower and lower. And so, look, could you see this gap fill down here at this $53 level? Why not? I mean, again, it's not that far away, really. It's only 7 or 8 points away, but with a massive money flow here, overbought and negative relative strength with bad fundamentals, that's really your headwind on this name. Okay, everybody, that's it for today's halftime show. Again, I'm Pete Carmasino, the Chief Market Strategist here at CHAIKIN Analytics. Thanks for joining us. And again, when you're doing anything in this market, especially when we see these kind of setups on the downside where the path of least resistance is lower, be smart. Use your risk management, use your stops, whatever technique that you have, try to protect yourself as best you can. But again, build a watch list, and we're going to start hopefully looking at names that are starting to curl up and get a little better into these. And once this is all done, let's hope we hold some levels here. Again, that 4,300 level is important on the S&P. Hopefully we can close above there. If not, 4,250 comes into play. All right. Be well, be safe. We'll be back here next week. Take care, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.